Welcome back to the channel. My name is Brad. Today we're going to go what's in my wallet. So what do I have in my portfolio? Answer some more questions about my $500,000 into just cover calls and give you my thoughts at the end about everything that's going on. So let's talk about my selection of ETFs for cover calls. Remember, the title was covered calls. Only covered calls. That was all that was in that fund. I didn't go into all the CLOs. I didn't go into everything else. But that was only covered calls. It shows that 93,000. Yes, 93,000. Remember, I live off of 8%. So $500,000 is only $40,000 for me. $53,000 a year will be getting invested back into everything else. Either cover calls, if the market goes down, I'll be buying all these other places. And that needs to be taken into consideration. I'm not getting all my income from one source. That's just foolish. You just don't do something like that. But that's my thoughts on this. Now, I'm going to go ahead and just show you really quickly what I added, and then I'll go through some of the thought process of everything else that's still in my portfolio. I bought RDTE, 100 shares. Everybody knows that if you've been watching the channel. AIPI, it's a small percentage. It's a little more high risk, a little more concentrated, but that's why it's a smaller percentage of the portfolio. Berkshire Hathaway, because somebody says I can't invest like Warren Buffett. Oh, now I can, actually, sorry. And that's a diversification play off of my IBV, which is the S&P 500. And I was getting a little top heavy, so I moved some of those funds. Now, I should tell you on that, we'll talk about IBV when we get to that slide. In GIAX. Added a small portion of that. Looks like a good player, and not too worried about markets up and down. So my core holdings. IBV, it could be VU. Unless you're doing options trading, it should not be SPY. Just throw that out. Go with VU, IBV, one of those funds that has, lower expenses, and you'll be fine. QQQM. I'm not option trading, so I don't hold QQQ. The expense ratios are cheaper. In Berkshire Hathaway. Now, I could go ahead and fund everything if I sold some of this stuff off, but I'm not. This is funds that I have for total market exposure. It doesn't matter. I'm just going to hold these. I'm not going to sell these to go fund other income funds unless I need to. But I don't think I'm going to need to. I'm just reinvesting. So I'm going to hold these long term because everybody should have total market exposure in one form or another in their portfolio. Covered calls. Okay, I've given you my list. Those are the ones that I'm sticking with. Now, what am I going to do about QDTE, XDTE, and RDTE? Well, I'm debating. I think I'm going to set a stop loss, and then I'm just going to let it ride. If it hits my stop loss, I'm going to get my original investment back out and fund everything else. But until that happens, just let it ride. Use the funds for funding everything else, monthlies. I don't want to say it's just $80,000, but it's not going to go anywhere. Yes, it goes up, it goes down. We're collecting monthly income, or actually we're collecting weekly income. So that helps fund everything else. But those funds may just get stopped out, and I'll be left with just the funds that I have left in it, just for giggles. And those funds will still buy the one share every week and let all the rest of that income fill up all the rest of my buckets. Hopefully that kind of makes sense to you, filling up the buckets. Fill up these buckets and get it done with. Master Limited Partnerships. HESM got a haircut. Some of those funds went into my covered calls. Covered calls are a faster horse, but I like the master limited partnerships. Why? And it's not due to price increase or anything else, but why do I like these master limited partnerships? Well, they don't have very often cuts, meaning if the market went to down in the dumps, I'm going to get my premiums. They don't, master limited partnerships usually don't cut even during recessions and the worst times. Their price might go down, that's true, but what they pay me normally doesn't go down. And that's what I'm looking for, a consistent payer. No, they're not my 8%, but they're pretty close. But I'm looking for that consistent player. Having a little more diversification in something else, because somebody's right. Hey, if covered calls go down 50%, my income could go down well with it, but I'm going to be reinvesting back into it. I'll still be able to get my 8%. And you know what? I have other sources of income, and I don't have to worry about markets and what the market players are playing, because it doesn't matter. I'll be getting my consistent premiums. Business development companies. Somebody says, hey, I should have more business development companies. Well, I have 3 business development companies individually, and I have a fund that's diversified that somebody's actually managing, so I can have more diversification in business development companies. Now, I think this is something I need to fund a little bit more after my cover calls, and they will get funded to be a bigger, significant portion of my portfolio over time. But right now, these guys are doing well, and we're just going to let them grow and take the income, and we'll just see where they go. And as far as I'm concerned, they're giving me my 8% very consistently, and I'm very happy about that. Of your portfolio. Preferred stocks. Preferred stocks got a haircut. Just throw it out. Took some profit. Why not? Took some profit. Still gives me my close to 9%. It's going to go down a little bit percentage-wise because the price is significantly going up. But even if it goes down to 7%, preferred stocks, I'm going to get my premiums. They're going to give me my premiums before they give you your distributions for dividends. That is how they work. Preferred stocks should be a small portion. Remember, no one fund in income is more than 5%. And notice I said income, because IVV and QQM and Berkshire Hathaway, they can be 10, 15, 20%. Don't care. Income funds will not be more than 5% of my total holdings, because if something goes bad, Brad's retirement doesn't get wiped out. Alternatives. Now, I said I don't hold bonds. I hold treasury bonds and treasury notes. Okay, yes. I don't hold municipal bonds. I don't hold corporate bonds. I have not been able to find a corporate bond or municipal bond really that I like. Still looking if anybody has any recommendations. I mean, I even looked at the NEOS fund, and on their total bond market, it's close, but it's not quite what I want. Anybody have any recommendations? Put it down below. If you watched Income Armchair, he has TLTW on the last 2 distributions at current price, about 11%. Now the volatility will be going up because of the rate cuts, so that 11% is probably very conservative. But from my first video on TLTW, I'm up 4%. So I think TLTW, I don't know where the market's going. Let's face it. I think you may have 1 more month, 2 more months, then I would not be getting into TLTW. Market will price it in, but I still think markets only price in up to 6 months in advance. They don't price in 18 months. SVOL, alternative, they just had a cut in their distributions. Going to be right around the 15%. Okay. I still get my 8. I can reinvest my 7. I'm good. And that's the beauty of how I'm building this out. 8% is what I live off of. Everything else gets back into the funds. All but TLTW. We'll just go ahead and throw that out. TLTW, all the funds come to me. Now, I'm going to manage this one after the next rate cut, and then we'll put a stop loss. I'm going to come up with a number and say, let it ride until you come back down to this number. That might be 3, 4, 5. Who knows? Who knows how many years that's going to be? I'm going to collect my distributions every single month. But I think in the long term, the next cycle, and I more on that on Friday night or Saturday when I get that one done. When the next cycle, TLTW is going to have to go. Not that it's a bad fund, just that it's going to go, and I'll buy back in at a lower price because I'll know when to buy back in. Just my thoughts. Infrastructure. I kind of threw this out and they said, the government's going to spend money. They can't not want to spend money. And you should have infrastructure. And notice some of these are global infrastructure, right? Because let's face it, China is already pumping liquidity into their markets. And if you're not watching the Chinese stock market going up 4% in a day or a couple days, you're missing the boat. China's pumping in liquidity into their market to bring back up their marketplace. It's what they're going to do. They're going to spend money. You might as well have funds that pay you a certain rate and be happy about it. Infrastructure funds generally do not cut during downturns because the government is going to spend more money and infrastructure is going to take advantage of it. Not that it's free money. Don't get me wrong. It's not free money, but it's a diversification play that infrastructure should be something in your portfolio. Now, I can manage 30, 35 funds, but I'm retired. If you're not retired, you might only have 5 or 6 funds, and that's perfectly fine. You might even have 3 funds, and that's perfectly fine. I'm just having a little more diversification because I've reached that age that I can have other funds. Now, the last one I just consider to be other. Right? Real estate, asset diversification funds, all kinds of other stuff to get into. Now, personally, you need to manage some of this stuff, but it gives me a wider range of diversification. Now, I'm still looking for more CLOs and maybe some mortgage REITs. So anybody has any suggestions, put them below. I'll definitely write them on my list and check them out. Might expand into them next. But hey, you should have an extensive across the board things not tied only to the S&P 500. I mean, utility income. Now, it is leveraged in there, but utility companies, usually consistent payers because guess what? They're a monopoly. They get to charge you not what they want. It's state regulated, but let's face it, the state, if they want to raise your rates, normally the state does not turn them down. Just saying, they're going to get their money. So, and they're going to pay me a distribution. And I'm happy with it. So again, it's a diversification play across the board of different ways to get money. And I'm going to be happy. Just in case the market crashes. I have my own thoughts on that. And I will say, I don't expect the market to totally crash anytime soon. Yeah, we're going to have bumps and we're going to have corrections and we're going to have other things come along. But the general fundamentals of the market aren't going to change. CLOs. I only hold 3 of them. Now, I've had a couple people recommend some CLOs. So for me, a CLO has to pay at least 8%. If it's not paying me 8%, just not interested. Sorry, it's not for me. Might be good for you. I've had a couple of suggestions. They were paying 6.5%. That's way too conservative. Now, the 6.5% payer, they had a lot of price appreciation. We'll give them that. It's a mixed bag. So mine do not have a lot of high price appreciation, but they're paying me a higher rate, where 6.5% will have price appreciation and still give you 6.5%. So it's back and forth. CLOs, you should have something applied to them. So any recommendations for any other CLOs? And I did receive one the other day, and I'll look into it, and maybe I add it to my portfolio, maybe not. It's going to take a while. I don't have unlimited funds, and I'm funding this with income, not from me putting any more money into my accounts. Money's coming out of my accounts, soon to be coming out. So, and I'm not selling Berkshire Hathaway and IVV and QQQM to fund other income funds. Then we're going to talk about my little gameplay with AMZY and AMZP and Misty and NVIDIA. I keep on saying it's a 5-year play. And I'll do a complete video on my thesis of why I say it's a 5-year play. But these are long-term, not part of any income plan today. And I'm just going to hold on to them, let the share count grow, let the price go where it wants to go, and see where they are in 5 years. I don't look at stuff on a daily basis. I do look at stuff on a daily basis. That's a lie. That's Brad, bull. We know you check your account twice a day. Yes, I probably 3 times. But I don't sell. I just want to see what the market's going. Like today, Tuesday, October 1st, there's this whole thing about oil. Great. You know what? This will blow over in 3 or 4 months. We're lucky it doesn't blow over by Friday. Let's just face it. And if we want oil, depending on who the president is, another story, we have oil ourselves and we can get it. We're a little too dependent on overseas, personal opinion, but okay, whatever. Whatever I say is not going to change the world. But 5-year plan on these. Just Bitcoin, 5 years. I don't even know if we're at top of the market now for Bitcoin, but there's going to be another whole halving. And let's face it, BlackRock owns 2% of all the Bitcoin already. How did that happen in just a few short months that BlackRock somehow now owns 2% of all the Bitcoin? I guess nobody's paying attention to how much BlackRock is buying. And I don't think they've ever had any sell days, even though their price went down and people sold. BlackRock kept. But anyway, it's conspiracy theory that they're holding on to their funds and not selling. And now they have approximately 2%, over 2%. So Misty's my play. It's a leverage play on Bitcoin. NVIDIA, if you do not believe in AI, don't buy NVIDIA. If you think AI is a fad and going away next year, don't buy NVIDIA. Just if that's your thesis. My thesis is AI is going to continue to grow. I mean, there's so many movies about how this all works. And it's amazing how some of these movies are starting to become more and more real life. Well, right now, NVIDIA is long term going to be a major player. So, hey, I'm going to collect those high yields off of NVIDIA over the next 5 years. Bank it in. Let the compounding work. And hey, when I'm in my 60s, I have something to do. I think that covers everything. So we'll see how markets play. And when I sell my QDTE and XDTE, I don't, unless the market crashes or something changes, it'll be a while. But I'm going to fund everything. I'm going to take you along for the ride. Until next time, God bless.